If you would type the number 1 in the questions box to let me know that you can hear me, I would greatly appreciate it. Thank you so much. Let's see, Paulo. Hope all is well. Yes, Paulo, myself as well. I hope everybody's having a great day. John said, good morning, Rob. This is the first power hour I have been able to attend. Sound is good. Well, I appreciate that, John. You're going to have a blast. Welcome, guys. It's been an interesting couple of days, to say the least, on the market. For those of you that have been following the market and trading the market, it has been interesting is the word I'll use. I mean, it just has been that. And we'll go through and look at some charts, but and I'll share with you guys maybe a little bit of some of the stuff we've done last week. But yeah, Scott goes, you think? Yeah. It really has. Very, very good. If you're on the right side of the market, obviously. All right, so guys, let's go ahead and jump in here. January 12th, which is, oh my goodness, tomorrow. I cannot believe we're already in the middle of January. I was on the phone with Bill Corcoran earlier today, and we were talking about something. He goes, we're going to have this done by Valentine's Day. I'm like, Valentine's Day? How far away? And oh my goodness, that's a month. Yeah, so yeah, there's your alert, guys, for those of you that forgot, right? Get your gift now. January 12th, this Tuesday, tomorrow evening, Monster Market Movers version 2.0, or improved and updated. Guys, you're really going to like the stuff that I'm doing in there. And you got to check it out. It's tomorrow evening. Then the next steps that I haven't changed this document yet. I'll have it changed the next time we get together, is January 20 and 21. I'm teaching in Next Step Chicago. It is on Wednesday, Thursday. And then the 28th and 9th in D.C. I'm also teaching New York, Philly, and Detroit in February. I know the cities. I didn't have the dates, so I know they're out there. I just got to get them documented and put in there. 2-day Traders Camp on the 25th and 6th. On the 25th and 6th in Atlanta. I am super excited about where we're going to be holding this event, guys. It is no longer in our corporate office. We've got a facility that we're going to be using that is phenomenal. We had some people go down there and check it out. Sylvia was down there. Someone from our company, Steven, those of you that have been to the 2-day know, or the 5-day know who Steven is. They went down and checked it out. So I'm really excited about, yeah, not 6 screens per student, Scott. No, it's not going to happen. I don't know if they're going to have 2 or 3 or what, but yeah, I know. Monday nights, every Monday night, including this evening, 8 to 10 p.m. Eastern, we do the Trader Talk. Amazing E-Minis, 1-day workshop in Chicago, right at the SIBO, held after the 2-day event. Come and hang out with us, guys. You really want to learn how to do this at night, on Sundays, at 3 o'clock in the morning or 4 in the morning when Europe opens up. This is the place to be. And then Power Hour, this workshop every Monday. Now, guys, we are the 11th. Next week is Martin Luther King, so there is no Power Hour next week. And the week after, I am teaching the Traders Camp, which is the 25th and 6th. So we will not be teaching one there as well. All right, so let's see. John just typed in, I'm going to be in your next step at the SIBO. Excellent. There we go. Paulo says, just got in the bonus section of the Monster Market Movers, but it only has the manual and the fib video, nothing on the multiple required videos. Oh, okay, Paulo. So we will see what we can't do about that right now. I'm going to write a note, and I'll make a phone call. I see it, Pablo, so I'm not sure why you don't. Bonus materials. I'm not sure why you don't. And let's just make sure you're in the right page. If you're on your My Account page, under subscriptions, right, you go to your name, My Account, right, under subscriptions, right here, bonus materials, and you'll see a lot of different bonus materials here because I have a lot of different things I'm subscribed to here. So E-Mini Trader Talk is a ton. Monster Market Movers, this is what I'm seeing. Now, when you see class manual Fibonacci video, that might still be from the last one, Paulo. Not sure why it's showing the way that it is. It may just be the way they set it up, but you should be able to see this. But do you see all of this, Paulo? You should see that as well. Okay, so I will find out. I'll give a call this afternoon. So you're only seeing what shows up on the 113. I'll give a call after we're done, Paulo, and find out. So Victor said, Monster Market Movers videos available for review now, was just reviewing prior to this webinar great fib candidates. Okay, so yeah, I don't know, Paulo. Someone else is seeing it. You're not really sure what's going on. So we'll get it figured out, though. We'll figure it out. All right. So, guys, here's a page to connect with us at BetterTrades. And as I've said, we're going to be adding to this page. You're going to see Tumblrs and LinkedIn's and all kinds of great stuff in there. But here's what I know you're all waiting for is this disclaimer. Basically, it says, I'm not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, indicator, trade setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I'm not an advisor, that means I'm not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Okay. Very good. So let's go ahead and take that down, and let's go take a quick look. Let me bring this down here. So last I looked, SPX, we were, on extreme charts, we're down just a little bit. 1.36. CNBC, right before we started this morning, here it showed we were up 1.5 points. So we're, just overall in this thrashing market. That one day right there where everybody thought, okay, it looks like we're going to have some recovery, just continue to collapse from there, and the bears are out in full force. John is asking, Rob, is there some place you would recommend to stay close to the SIBO? John, you can call the office. I think we stay at the Palmer House is the name of it. But if you call the office, they will tell you the hotels over there. They're pretty good with that. So I would definitely give them a call. They can help you for staying there for whether it's a 2-day next step or the 1-day e-mini class. Either one of them you'll be able to get right from there or from them. All right, so guys, this part of the workshop, this part of Power Hour, what we're known for, what we've become famous for, people talk about, is the candidates. So what positions, what candidates do you guys want me to look at? Type the symbols inside of the list here and let me know what you want to look at as I kind of peruse who's here. Problem is, every time a new person jumps in, it throws my whole screen off there. Let's see. Yeah, I'm too popular. There you go, Scott. So Skip says the Buckingham Athletic Club is a hotel at the SIBO. Beautiful place, right? From what I remember, a little more expensive, but they have a very limited number of rooms. But that is definitely an option, John. It's right there at the SIBO. All right, guys, so let's go take a look. Jan put in first Amazon. So let's go ahead and take a look at Amazon. And guys, we've executed quite a few awesome trades this last week on, I'm just going to open something up here. I just want to see what screen this opens on. Okay, beautiful. Good. So we've executed quite a few powerful trades over the last week, and I'll give you an idea of exactly what we did, if you just bear with me. Let's see. Okay, so let me just put this up here. So Amazon, just see where we're at. Just bear with me, guys. I'm trying to put this thing together here. All right. So Amazon was not one that we actually triggered a trade off of, but from right here, PANW, yeah, when was the last one? So these are the actual trades that we were able to get off and close. We had others that didn't close, but this was from Tuesday until Friday's close on the positions that we were able to go ahead and pull out. We had a couple different trades in there, price on Google, 2 each, maybe 1 or 2 others that we did the same on, Tesla as an example. But if we pull one of those up, if we get to any of those, I see that John was asking for price on Netflix, Amazon, Google. We've got all of those pretty much on there. So here's where we're at in Amazon, guys. We're in a bearish bias right now. And we broke through the 55 period moving average a couple days back, and the 8 crossed just 3 days ago, 2 or 3 days ago, through the 55. So we're definitely in bearish territory right now on what the market is showing us. Right, we are in this sideways mode right at the 382 level. We've been down 1, 2, 3 days in a row. We just cannot seem to bounce off of that level or break it even at that point. Earnings coming up right now. It's tentative on the 27th. Definitely want to keep your eye on that. That's a busy day, the 20th to the 27th. Today, I think, was the official start of earnings. Alcoa's announcement was today. So it's the official, unofficial start of earnings today, as with the announcement of Alcoa. This is updated a little while ago. Let's see. Yeah, it's not giving me a time, but it is updated just a little while ago. And you can see Alcoa wasn't perceived well. And this is going to be a big one, guys. This earnings season is going to make the difference of whether or not we see any recovery whatsoever or not. I am going to say this, guys, and we'll be talking about this over the next couple of days in the market insights of what positions to start looking at. But you guys need to start considering having a gold, G-O-L-D, a gold type position, whether it's the stock, the future, the Forex, not an E-mini, I keep trying to say E-mini, ETF, whew, couldn't get that out for nothing. But you're going to want to start looking at some gold type positions right now, because if the earnings season is bad, we're done. We're in trouble. We're at like a long way to go down on the marketplace. All right, a long way to go. How far? Let's see. Let's do that. Scrunch. And we're looking at 1604 is the downside target that we talked about yesterday in the market insights. Those of you guys, we had sent out a Christmas special, and if you guys, it was 8 days of Christmas, and you had the ability to get into the trader talks with us for a week, and insights for a week, and so forth, at no cost. And this is the week that that's going on. And those of you that were in there yesterday watched me talk about this, and the confluences that are at that 1600 level are huge. But since we're at 1900 and the potential to the downside is 1600, you need to be looking at, you know, some of the bearish type positions that are out there and the hedging vehicles of gold. Let's buy some puts. Scott, you can, but what happens? You're absolutely right, but what happens then as the market starts to shift and go down? What takes place in the market then? Right? Volatility kicks up. Right, and Scott typed in VIX. So as the VIX starts climbing, when higher VIX, can anybody tell me what a higher VIX means? What does that represent, a higher VIX? Good, Rose. Rose said, I took advantage of the 8 days of Christmas. Excellent. Good. That's why we did it for you guys. Right, Scott, more volatility. The higher volatility, what does the higher volatility bring? Uncertainty, Diane, absolutely. But what does the higher volatility bring to options pricing? Particularly puts. Right. There you go, Scott. And Patty and John. It's increased prices. The value of the puts become overvalued, in many cases dramatically overvalued. So the ability to buy puts, lower open interest as it is already, so that's a little tougher. The ability to buy them because they're overvalued, less open interest. And when I say lower open interest, I mean than call options have, right? Generally, than call options have. So the ability to be able to buy them gets to be a little bit tougher on certain positions. You know, you go and look and you may find Green Mountain Coffee Roasters has, 200 open interest on calls and 60 on puts for the slightly in the money options. So they may not work as well. And again, I'm not saying not to trade them. Yes, Scott, you are right. We definitely want to look at puts. But if there's a position that I can move along with the marketplace and have less of the volatility in that position because the market's really focused on puts, ones that are inverse to the market as an example, is a potential way to look at it. So when we go back and look at Amazon, I know I'm kind of jumping around there on that, Jan, where you asked for Amazon. But right now, 605, 600, that's where I see downside. 583 is the next target from there. On the upside, we've got great confluence at that 632 level. If we push higher, that 632, which is a confluence, $632, is a confluence at the 0.236 level right there. A very strong point. If it pulls up and reverses, that's a great bearish opportunity, particularly if the market is kind of following suit at that point. Right, and I've got CNBC just floating around in the back there, and I'm not seeing anything up on it right now. But so NASDAQ is down right now, 22 points they're showing, right? And Euro's getting smacked yet again, right? But they had something flash across that. Fed to pay out $97.7 billion of 2015 income to Treasury. It's amazing what the government has, how much. Yeah, Scott said, I can't wait to see the 3 a.m. E-mini trader talk. Yeah, we're going to have some issues getting that one approved there, Scott. Not to mention my wife reminding me that my circadian rhythm is off if I'm going in that late. All right, John had a couple of symbols in here. Let's go ahead and go to Priceline first. Priceline, guys, has become a phenomenal day trading vehicle for us, right? We've taken Priceline 2-day trades in the last 2 days. Each time it has to come at a clear and concise entry. Yes, Priceline has had a major downturn, right? Can anybody identify, and I will help you a little bit, can anybody identify a lowercase letter on this screen? Don't be shy. And I'm not seeing if you guys are typing it or not yet because I'm looking at trying to find a pen. Right, Diane, you got it, and Brian, many of you, right? Scott's the only guy that may be an H, right? Maybe an H. And look where it failed, right at the 50 percentile. Right at the 50 percentile. Right, Victor, exactly. It's a retracement. It pulled back up, so gap down, which is awesome. Right, I love gaps when you look at fib lines. I love using them in my fib setups. Gap down, we finally bottomed out right down here. We retraced, came back half or 50% of the original move, whatever that move was down, and then we failed. 1, 2, and then we came right back up again. And we did continue, but I was not in it any longer at that point as we took that bounce. So when we look at Priceline right now, we get back to the moving averages. I'm going to hit the scrunch key, the F11. It looks like 1111 and 1100, so 1111 and 1100 are our two downside targets. On the upside, we've got 1176 and 1193, which is the 8-period moving average. So I would love to see a pullback to that and a rollover. A little tough to take a directional trade, but an intraday trade on a day like today is not bad. As we pushed higher, let's go and put Priceline in here. So I was down. Let's go grab a 5. So you look at what's happened this morning, right? Let's go back and pull the chart up here. Look at that level, 1140.05. So we'll just worry about 1140. So, oh, got to get the tool first before I can snap out that line. Right there, 1140. So what happened? We pushed up higher. Right on the open, we pushed right up. The wick came all the way up here. We failed. We played around with it. We came back down. There was an opportunity to take the bearish trade, or there, right? And that's exactly what I'm looking at, guys, is the bearish trade setup on price line. Look at the move now. Right off of that 1140, we're down at 1132. You realize, had you taken that move off of that 1140, we did move down to about 1125. So there's a 15-point move to the downside. So Tom says, where does it now go based on the H? Tom, you're referencing or referring to the H we saw back here, correct? If you're looking at what we looked at on the daily chart here, yes? Okay. So if you're looking at what we looked on the daily chart, Tom, now we start to look at our fib levels, and that 382 level of 1111 is our next downside target. Well, we're at 37. We're looking at 11. 26 points move to the downside is our next target. Now, we didn't quite get down there. We got down to 1125. But, guys, let me ask you this. Can Priceline move down, 25 points in a day? Or up, but can Priceline move 25 points in a day? In an hour, Scott says. I mean, it's got a fairly high Wilder's average true range, right? The Wilder's is 30. We'll call it 30, which means it can move $30 a day. That's average. So the potential is there, and there are days, there's no question, there are days that Priceline moves much greater than 30 in a day. Right? If you look here at the highs and lows of yesterday, or Friday, 1183 and 1135. Almost 50 points was the movement on Priceline. So, Tom, I'm looking at it as where it goes to based on the fib levels, not the H any longer. The H is an entry signal. That's all that is. Once we take that trade, then we use fib lines to help us understand where it goes to. So John said, Rob, will you take a trade on Priceline, and if so, when? Okay. So John, the entry was at one point off of this 1140 level. For me to say take the bearish trade now, you can because of the moving averages moving under it, but I wanted to take it off of that 1140, not on that first candle, right? We came down a little bit. It was nice to at least give me lower lows down in here. So could you have taken that 1140 or that entry at 1135 as you broke down on that one big candle and broke all those bottoms in there? That's very possible. Or if you didn't take it there, watching it come back to the 1140 and fail right at it, John, and roll over was a great opportunity, because now if I were wrong in this trade and I took my trade, let's say this candle right here was the entry. That down arrow was the entry. Well, my stop can be set, fairly tight in here now, because we're working off this line, not necessarily off of all of this mess. Can anybody tell me something else that you noticed only about today? What else do you notice that is a bearish signal? Everything you're seeing on the chart, just exclude that last little candle there. Everything you're seeing on the chart, what else do you notice about a bearish signal? So Tom said there was a cross. Okay, that's good. Brian says an engulfing pattern. Okay, what else? Not what I was going for. I don't know where you're looking engulfing though, Brian. Certainly nothing here, and I'm not saying here. I'm saying today something else happened. Now you guys are getting it. You're getting it. Okay, Patty, Ron, you guys got it. Good, good. Watch. high, 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 and another high. They're all lower highs. Each one of those is a lower high. Right? So those lower highs, again, we had 3 lower highs. We're setting up right at resistance and roll over. Great opportunity right there. How you doing, Jim? Wilder's average true range 13 is about 30. That is not a day. That is not a day. So, Jim, what I was looking at back here, and I don't really fully understand the way you typed it in, Jim, so help me if I'm not getting it. 2971 is the average for the last 13 days, the average day for the last 13 days. Is that what you were referencing, Jim, that it doesn't just give us a day, it's giving us an average for 13? Is that what you were meaning by what you put in? If not, just let me know. Yes? Okay. Yep, you're absolutely right. But that tells me that it has the ability on average to move 30 points in a day. Now, there are some that are bigger. There are some that are much smaller, without question. 110%. All right, so now you guys have been great with questions and comments there. I got to go back up and find all the symbols. Okay, there we go. So there was price on. We've already looked at Amazon, John. Let's go look at Netflix. All right, so we've had a nice little pullback. We had a good run on Netflix. The stock pulled back. We've got earnings coming out very shortly. I'd be cautious on this one. Their options are already going to start being pricey at this point. But we're getting kind of congested here right under the cluster moving averages. I'd like to see the break to the downside. I am at a point of day trading this only right now. I will not take a directional trade on it. It doesn't work for me right now, right, a directional trade. So I'm going to steer clear of it. 109 and 102 are the downsides. 114 and 118 are my 2 upside targets. And then Google. Google. Right, so we had Google. I had this down yesterday as bearish with the pullback to the 55. We definitely stretched out. No day trade for me on this one today. We did get a couple of day trades off, one on Thursday, one on Friday, which was phenomenal since it moved from 48 down to 32, let's call it. Right, about a 16-point move. So very pleased with that. Pleased as punch. So 726 and 705 are the 2 downsides. I am not seeing an earnings show up on extreme charts, which worries me a little bit. I need to find out where Google's earnings are. It's always the bad thing of relying on the software to tell you. But they got to be coming out soon. All right, DPS. Victor, you were asking for that one. And then, Debbie, we're going to take a look at the YM for you. So Dr. Pepper, Snapple Group. So let me go to a chart that has no moving averages on it, and let's see what we've got. So if I'm looking for a place to draw the fibs, I've got a nice directional move in here from that bottom. This made a move up, sideways in here, move up, sideways, move up, good fail. Really good fail. So let's go ahead and draw the fibs from this low up to this high, right in there. We had a nice pullback to the 236, so that gives me a good indication that the fibs we drew are strong. Good pullback to the 236 and a bounce, a takeoff. The question is, do we need any fibbits in there? So we've got 1.5, so 3, 86 to 90, that's 4, so we need fibbits in there. So guys, what I've done is I've actually added pre-built fibbits into my charts. I put the negative 136 and the 0.118, turned them both black, so they mimic fibbits right inside of there, but now I only have one thing to do, just pull one out and I'll pull out. If I had to hide this fib or move it back, it's real easy. One fell swoop, and there's no squint your eye and try to get it right as far as aligning them in there. So right now I'm in a neutral bias on this one. Yeah, Victor, I'm in a neutral bias on this. It's just kind of moving sideways. Nothing really helped me there. I'm down below the green moving average, which is the 21. Get me back up above not only the 8, which is 93.20, but above this fibit of 93.37, and I've got some bullishness left in there. It's a good bullish trend. Keep your eye on earnings, which is February 10th. All right, so let's go look at YM. Let's see. So Google's earnings are marked on February 1st on your charts. Well, I appreciate that, Ron. Yeah, I'm going to just do the research and make sure. Okay, so Brian said I was asleep before you asked that question. Okay. There you go. Glad I was able to help. All right, so Debbie had asked about YM. For those of you that are unfamiliar with it, and if you've been hanging around me for a little bit, you've seen me talk about these. The YM is the E-mini futures contract. And basically, you can trade these, right? They started trading last night at 6 p.m. Eastern, right? Good pull down. I don't normally trade on Sunday. Good pull down, and then we started a really nice, strong move to the upside. You know, the move down, and let's do that first. I was going to mark today's move, but the move down, yeah, not really a good place for it. Let's try it here. Just trying to see if I couldn't incorporate this top here, and I'm not having any luck with it. So we're going to have this here. This became very steep. Nothing I could actually pull in using today's or Sunday's highs, because this line is going to project much further out from an angle standpoint there. So let me put it back in there. What happened this morning? We got a nice moving average cross up quick, came back down, but we set up for another bullish move that just stayed right in that realm there. It just kept working its way higher in there, and we get to the 11th, which is today, right there, 0.00, right, 111, 110, right? So at midnight, we're looking right here. There's our open of this day, this day starting Monday, the 11th starting. Right? We reversed back over. We got kind of sloppy, and then right about 2 o'clock or so, we started to get some legs and bounce. And here you are, 3 o'clock, which is the pre-market for the European market, and then 4 a.m. the European market opens and falls apart. Now, guys, I don't know if you've seen it, if you've heard it about it, but Europe right now is pushing very hard. And when I say Europe, Britain, right, London is pushing very hard to be removed from the euro. They want to get completely taken out of there. Is that a big reason that their currency is getting hit, or the euro is getting hit? Is maybe not them, but other countries. And that's been my fear with that currency all along. Yes, it makes it very easy that we all have the same currency and we don't have to change over to a different currency, because going to countries in Europe is like going to states here in the US. It's real close, real easy to get to. And I just don't believe it's the right thing to do. We've had a very choppy day. I have not done a whole lot with today. It's just been that. It's been chop, kind of yuck. A couple of quick scalps here and there, but nothing that's really set me off today of, hey, here's a great trade. Not after. Now, don't get me wrong. Go back and look at the S&P 500. Right? There have been some really great trading days in there. It's been hard not to make money, on paper, of course, but it's been hard not to make money with the way the market has moved. So today has become more of a chop and slop type day. You know, you just, no matter what I do, I can't align things. You know, that just, I'm not getting any kind of real consistency on my charts, right? I've got to fake it and move things around to get alignments to go. I'll go and duplicate this line, and I'll grab it and drag it down, and I'm at the same thing here. If I try to catch that wick, we pierce through, we're okay there, not quite there yet. It's just iffy right now is all it is. So we're in a bit of a trend down here. We keep flip-flopping on the moving averages. Debbie said, I thought the same thing, just chopped. Yeah, it's been a really tough day, Debbie. I've gotten smacked on 1 or 2 trades today. Maybe we'll talk about them tonight, but it's just, you wake up in the morning and you're used to seeing the S&P down 20, 30, 40 points, and it's down 3. You're like, okay, wait a second, what happened? Where'd the volatility go to? It's the market taking a rest, is what it is. Okay, so John said, Rob, I did a 1 contract on the YM for 135 points and the ES for 165 points, in and out in 15 minutes on both trades. Yeah, and awesome. Scott says, wow, nice trade, John. Excellent. That is phenomenal. Is phenomenal. 135 ticks. Oh, no, $135, sorry. $135 on 1 contract. That's awesome. Great job on that, right? Great job. It's just, if you look at it, you know, we'll talk about some of the pre-market stuff when we get into the trader talk this evening. But if you look at it, guys, I'm not saying you're void of places to trade, all right? Because, well, I'll just do this. So now, I'll pull it out. Here's the move up. Here's the pullback. And there's the explosion. I'm just saying. We'll talk about that tonight. I'm just saying. 6:15 this morning. Made the move up. The pullback came in right around 8 o'clock, 7:30, somewhere around there, and a nice bounce. So Kevin says, the European market was the only good real push in the YM today, about 1:40 my time, which is 2:40 Eastern. Kevin's in Central. Right, and that's just it, Kevin. There's not been great moves anywhere. There's tradable moves, but they're just not, they're not the big moves. It takes a little bit more work. Kevin said the European, oh, same one, same point. All right, I thought it was another question. So Scott said, if you catch the peaks, it's great, but if not, ouch. Yeah, and that's it, Scott. I mean, that's where the choppier markets become a little bit tougher, is when we get into these chop days. Let's see. Brian's asking about FAS. Oh, okay. I put it in S as if I were in extreme charts. Okay. Let's see what we've got here. 5-minute position. So let's go look at, oh, what did I do? Wrong template. Okay. Go back to FAS. We'll look at a daily chart. Right, FAS has got hit in the last couple of days. Just move that back in. You can see the overall pattern has been bearish on it. If we go ahead and look, right, this move down, great guide back up just to the 764 and a failure at that point. So we do have some lines down below from this fib that we've got drawn from way back when. So we're looking at 21 and 19 and a half on the downside. If we can get back above 24, but then 26 and a half and 28. So it's kind of not playing very nice. Let's see. Brian asked for Nike. So Nike had a really nice move to the upside. Let's go ahead and draw a fib. Right in there. So we've fallen into a bearish position there, Brian, on Nike. So we're looking at if it, now it's popped a little bit today, but it popped up. I don't know what that resistance line is that I've got drawn there. I don't know what that's for. Oh, it might be pre-split. That could be a very old line because I'm not seeing anything right there. So let's just get them out of the way. Okay. So right now I'm looking at bearish position 57 and 55 are the two downside targets. If it does push up, watch the 8 at $61. I'd like to see it close near there before taking any kind of bearish trade on this one. Oh, I know what it is. They just did a split. Yeah, I would be very careful with them just doing a split, 1224. What do they do? 2 for 1. If you hit the letter U, it'll unsplit it. That's where all those lines are from. Okay, Mickey D. McDonald's. They've got earnings coming out on the 25th. One man's opinion, but thank goodness their earnings are not based on actual flavor. All right. So we've got a good place to draw the Fibonacci off of. If we come off of this low right to this, we're going to go right to this high. This is just kind of a standard pullback, sideways move, nothing really going on here, nothing to see. Let's see. So I do like that little hook back we took in there, right? I do surely like that, right? Good bounce today. We're up about $1.25. So downside, you've got that 115 and 109. Upside, well, you're going to stop at that 117, which is the moving average, the 8, but 122 and 125. Let's see, MasterCard. No, Scott, you're right. McDonald's has not been a big part of my new lifestyle. That is correct. But then again, it's not really been a big part of my older lifestyle. I don't know. My kids never enjoyed it, and I'm really glad that they didn't. So let's go to MasterCard. That's the last one I had there, guys. So MasterCard has done real well. We used to trade this one, trying to see where they did their split. That's been a while back. So, move that off current. There we go. So they got earnings coming out here, guys. $14. Yep, you there, Tom? You good? You guys got me? Sound okay? Yeah, I don't know. As the screen froze on the WebEx, and then Extreme Charts froze. So that's fine. So when we look at what's going on here, they've failed nicely right off that 100-point level. and they're down at 90 bucks. Right, so strong move to the downside, good pull back up. Right, I'd like to take this one as a bearish trade if I can get the move back up to the 8-period moving average, about 93. If we can, then I'll be interested in that rollover. But keep your eye on this pullback here. That was a big wick down. We came back up, and a quick little snap brought it right back up. So right about that 88 level is going to have some importance to it. So be cautious there. Let's see. Okay. Any other symbols you guys want to look at? Actually, you know what? Let's do this. Let me see if I can get my hands on this other document. Let's see. Okay. So guys, in the E-mini trader talk we do on Monday nights, one of the students, Richard, had brought something up in there one night, and he said, Rob, the 17,711 price point on the Dow, on the YM, which is what we trade in the evenings in the trader talk, that's what we'll be trading tonight, that 17,711 price point is a fib level. How important is that? And I said, it definitely is important. I haven't put enough emphasis into it. I need to look more. And I've done a lot of research on it since, and have many of the students that are in there. And these are just, the various fib levels and what the sequence number is. 144 is number 13 in the series, okay? And if you look at the S&P 500, if you look at the S&P 500, we had this nice strong move up and this pullback. Forget about these light blue lines for now. They're there, but I don't want you to focus on them for now, all right? So the S&P is trading at 1920. If we go back and look at the fib sequence and find that 1920, we've got, 1597 and 2600, right? So we're headed down, so that 1600 is where we'll round this right there. That 1600 is where we'll round it. If we go back and look at the S&P 500, and now remember, 1597 is a fib line. 1600 is a 100-point price level, which is extremely important in the S&P or in any equity. And then we pull down and look for that 1600 level. We can see right here, 1604.64. It's in a light blue, so it's faint, but I have it that way on purpose. And if we stretch back to see the fib levels, you can see that that is a 50% line. 0.5 is that 1604.64 is a 50% retracement. That retracement comes on the heels of this move from all the way down here in 09 after the failure in 08, and the recovery started from 09 up to the highest high we had. Forgetting about pullbacks or anything in there, the overall move since that pullback in 09 has taken us from 666, wicked number as it is, right? 666 has taken us from there all the way up to 2,000, right? Plus. And we're at 1920 right now. So if I go back to a daily chart, and I'll zoom it back out a little bit in there, you could see we're heading down towards that 1884. It doesn't matter. It's not one of the fib lines on here. That 1597 is. What is all of this telling me? That we've got a major confluence taking place at that level. If the earnings season is a failure this season, right now, we could see the next move down to that level, and at that point, if we don't hold, is where traders are going to have massive panic, and if we do hold and bounce, is an opportunity to jump in full bore, right? Meaning if we can get the bounce off of there, off of that level, there's an opportunity to look to take some bullish trades at that point. All right. So Brian said, what do you think we should look at? Well, Brian, any one of these stocks can work. You've got to determine, right now, today, do you want to take a directional move? If the market is not giving us any direction with all this slathering that we've had, this massive hit that we have taken, I mean, one of the things that you want to be conscious of is we could easily see a move after what we've had take place here, from that move down, which was 2,000 down to 2,100 down to 1,900, we'll call it, a 200-point move. You could easily see a retracement take place in there. So the question is, what kind of short-term retracement could there be? And that's this right here. All right, look for the pullback back to, 2,000, key level. Oh, wait, it coincides with our 1994 level, or the 50 percentile level on the bigger picture chart we have here as well. All right, so there's not one individual. For me right now, what I am looking at, Brian, is I'm bearish. I'm bearish pretty much on everything I see right now, but not on a day like today. A day like today is step back and absorb what's going on. Because here's the thing, guys. See that $106,000? That $106,000 closed between January 6th and January 8th. That's what we're up. We're up right now 111,850, and we still have another 10,000 open, I think. We have five. We have 5 open trades right now. Those, I'm not going to show you those trades. Patty says, congrats on that total. Yeah, Patty, it just blew me out of the water. But you take the trades you're given, right? And I know some of you are going to say, oh, but Rob, one of those trades was price line at 44 grand. Well, that's awesome if you traded it. Yeah, but Rob, I don't trade them guys. I don't trade that price line. I didn't trade that Google. Well, that's 40, 50, 60,000 in there, and that's 75,000 there, and then we'll call it 80 grand. Okay, so if you don't trade Google and Priceline, mistake in my opinion, but if you don't, it's not for you, and that's okay. I'm kidding. If you took the 80 grand out, you're up $26,000. Let me ask you a question. Give me a 1 if you would be happy with $26,000 from the 6th to the 8th, and give me a 2 if you would not be happy with only making $26,000 from the 6th to the 8th. See, and there I rest my point. All right. Still a good chump change figure. There you go, Patty. I like the attitude. Brian gives me the 2, of course. Well, we made 106, so I wasn't happy with just the 26,000 either, Brian, right? So, but I do trade those types of positions. Whether non-funded or funded for you, I don't care. It's a comfort level of learning it. Once you learn it, you learn it. It doesn't matter then. Then it just becomes a mechanism. It becomes kind of the over and over again. Right? So the opportunity is there, guys. This was in the Market Insights. So those of you that took advantage of that Christmas special, the 8 days of Christmas, and you're in there hanging out with us this week, fantastic. Patty said, on several of my charts, when I was redrawing the fibs from the Market Insights video, I was not getting the same dollar amount as you when I'm using extreme charts as you do. I need to call tech support, or is there something I can do to the program? You can do it to the program, Patty. Bear with me, though. I've got to take mine off screen, and I've got to fix something first. Okay. Just not to show that on the screen. If you go to your program settings, you go to Edit Program Settings. Under Miscellaneous, there's a box that says, when adjusting price history for splits, also adjust for dividends. Make sure you uncheck that. If you leave that checked, let's go look and see if Apple does it. They had a dividend here. So if you leave it unchecked, if you leave it checked, did you see the prices just moved? Everything before the dividends dropped? Guys, watch right here where my mouse is. I'm going to uncheck it now. So watch, just to the left, these tops, I will put the top of the program box right there. I'm going to uncheck it, and when I click save, watch what happens right here to these prices. They move. That is because it's automatically adjusting for the dividend. We don't want it to do that. Okay? So Patty, I hope that helps. A couple of years ago, you mentioned something, but it was too long ago and too many notes to go through and remember. Thank you very much. You're welcome. Now that was easy, right? So now you got it. All right, ladies and gentlemen, we are done. I appreciate y'all being here. Massive crowd here today, guys. Big group. Go ahead and get yourselves registered for my my Monster Market Movers tomorrow night, guys. We've got 100 and some odd fib candidates. I think 174 was the number alone. So go ahead and check it on out. Come and hang out with us. And if you're in the Insights or the Trader Talks as the bonus this week, make sure you take advantage of them. It's a week. You got to be there, guys. You want to get in and watch it. I mean, we're only up 106 grand this year. So if that doesn't quite work for you, actually, was that the right number? 106 for the year? It's 111 for the year, plus the other page. Victor said prereqs are great, recommended. I appreciate that, Victor. I'll be asking that question tomorrow of what everybody thinks of them because it's brand new. It's 3 hours of prerequisites. All right, folks, have a wonderful day. You will see the pop-up in your questions box or your chat box. You will see the pop-up on BetterTrades.com. You will get an email. You will have a representative of BetterTrades ringing your doorbell shortly to remind you to get registered. All right, folks, have a great day, and we'll see you all soon. Take care now.